webinar on the secret to mastering year end. We have people joining on Zoom. We also have people just joining live on YouTube. Those of you who are watching on YouTube, we won't be monitoring the chat there, so you won't have a chance to ask questions. So just sit back and relax and enjoy the event. Those of you on Zoom, let's test the chat. Let's ask a question. Tracy, any ideas on a good question to ask? Oh, you're on mute. That's you're already doing the
I am. I'm already on mute, aren't I? So yeah, we do all come in on mute. So we will obviously have to ask you as well to unmute yourself if you wish to be heard with this one. But yeah, I think the new one for me this week, John, has been Wordle. Has anybody else got this craze or seen this? It's doing the rounds around our office.
Yes, unfortunately.
Good. Yeah, it's a bit of a craze on our team at the moment. So everyone's posting their Wordle results every day. So shout out yes if you are on the comments, or no if you are using Wordle.
Thanks, Nicola.
Many times. And if the chat's annoying you during the event, just close the window down and don't click on the chat window if you don't want it to take over your window. Just leave the messages popping up and just ignore them. I'm going to run a poll just to get an understanding of a few questions related to accounting. So I'm just going to launch that. You can read that while it's running there. There's a few questions you can answer. You can just say yes to all of them or none of them. So we just want to get an understanding of kind of the general challenges that you may have with accounting principles. So my name is John Fagan. I'm CEO of Scribe, and today you've got Tracy also at Scribe. She's almost a qualified accountant, aren't you, Tracy? How you
I'm
doing?
getting there, yes. Another exam this week.
All of her exams, she seems to pass with like 98 or 99%, so she's a superstar. And then we've also got Hannah Driver, our qualified accountant.
Right, you're on mute.
Hannah will be doing most of the webinar today. She'll be giving you an idea of overview of preparing for the year end, preparing for the AGAR, signing off your documents and publication requirements, and then looking ahead to the new financial year. So that should be about 20-30 minutes, and then we can go into a Q&A section, and then afterwards there'll be a few minutes where Tracy will kind of demonstrate Scribe and what relevancy it has to year end. So some of you may already be Scribe customers. If you're not Scribe customers, it does not matter. This is not a sales pitch or anything. You know, the event is focused on education and theory of practice, but Scribe is a software company that builds software specifically tailored for parish and town councils, so we can help you increase your productivity, reduce all your concerns around compliancy, and then you can access award-winning support and expertise. So that is our day job. These events that we put on available to everybody. This is kind of our hobby, to provide free training to anybody in the sector. And, you know, in terms of our customer base, we have over 750 customers, and we're just on this mission to help local communities work smarter by modernizing their systems. And, you know, we're a small team, very dedicated team. We're based in Norfolk. Not sure if any of you come to North Norfolk on holiday, but highly recommend it. Yeah, so that's us. So we're going to get down. I'm going to stop talking. We're going to get down to business. I'm going to hand over to Hannah, which is going to talk through the main content. So over to you, Hannah.
Thank you. Thanks, John. I'll just share my screen with you all. Okay. There we are. So as we said in today's session, then the secret to mastering year end for town and parish councils. Just a quick question regarding questions. We'll have a section at the end for questions. So if you do want to ask a question, just save it up and you can ask at the end. If you want to pop it in the chat, that's great as we go through, and then we'll pick it up at the end. But I'll just continue through the process of the session, and then we'll do the question section at the end.
Well, Hannah, I'm going to publish the results now.
Oh yeah.
So it might be interesting for
yes.
you while you're talking through it. So I'm going to share those results. There you go. So there seems to be a lot, most of the people, the differences on reserves. and also actually the differences between receipts and payments, I&E.
Yeah, so that we cover that. I could cover that shortly in a moment, sort of the relevance to that at the end. So that's interesting. Thank you. Okay, lovely. Right then, so also as John mentioned, 4 sections to today, thinking about preparing for year-end firstly, so how we can do some work now to get us ready in preparation for the end of March. The AGAR itself, what that involves, what you do once you've completed the AGAR in terms of signing it off and publicating it, and then at the end looking ahead to the new financial year as well. Okay, so preparing for year end firstly then. So I think it's important to say, obviously there's some additional work involved in completing the AGAR at the end of the year, and it's important to expect that additional work and try and factor it in. I know it's really difficult when we talk about that, because often we talk to clerks and RFOs who hold a single role, they're working alone in the council, often part-time, probably with stretched hours as it is. So it's hard for me to say that, and I know you're probably super busy, but if you can put some time specifically aside to address the AGAR once you get to that year end point, so that you've got some specific time to do so, but also maybe between now and the end of March as well, to put some time aside to think about, do I need to do some more work on my Cashbook, my accounts to get prepared? Do I need to do some work on understanding what I need to do, how I need to do it, in order that once I get to that point, I'm feeling in a better position. Okay, also up to date and accurate data is key. So if you come on to any of our sessions before, we like to go on how important that is. And I know that's kind of fairly basic assumption, but it's tied in with the time that you have. It can be a difficult thing to do, but it's really important to assure that all your data is accurately recorded in the Cashbook. So if at the moment you've got a few piles of invoices in the corner that haven't been entered on, etc., so important to get them on and get it up to date. And like I said, if you can put some time aside regularly, weekly, fortnightly, from now to the end of March to get that happening, get those bank reconciliations done as well. Again, we'd recommend that you do it monthly, so that if you do have a problem, it's tied into 1 month to find it, so that you're not having a great long exercise at the end of the year end and there's differences that are just hard to find. Equally, if you've got yourself a situation where you've got a difference that just won't go away, you've been carrying a £10 discrepancy the last few months, do put some time in to resolve that, because you can't move on with the end of year accounts if your bank rec doesn't balance. That would be your starting point that we'll talk about in a moment, and if you can't get beyond that, then that's going to cause you a problem. Also thinking about that as well, so if you're VAT registered, it's likely that your quarter 4 will coincide with the end of March, so that you'll need to do a return. But if not, if you're just VAT registered, then we'd also recommend that you do a Form 126 claim coinciding with the end of the year. So if you do that, it keeps it in line, know where you are at the end of the year as well. So that will require some additional work, so collating the data for your end that claim. So think about what you can do now. Do you need to go and check your paperwork? Do you have some missing VAT numbers that you need to get off your invoices? Do you need to do some additional work on that you could do to get ahead of schedule? Also thinking about receipts and payments and income and expenditure. So it's interesting on the poll that John did that causes problems, and we do have quite a lot of instances where we talk to clerks and ask them, what accounting approach do you use at the end of the year? And they're not entirely sure. Either they don't know the terminology, or they know how they do it and they don't know what it means. So just to go through that, then it'll either be that you're working with receipts and payments or income and expenditure. So receipts and payments is the simple form of accounting in that you're recording what happens when it happens, regardless of when it relates to. So if you make a payment, it's in your Cashbook on the date you pay it. If you receive income, you record it in the Cashbook the day you receive it. Okay, so it's fairly straightforward, fairly simplistic. Those of you in income expenditure, that will generally be a conversion from receipts and payments working in for the financial year, with the conversion to income and expenditure at the end of the year. And income and expenditure basically means that you start to think about the timing of when things to relate to. So rather than simply just being, I've paid it on that date, I've put it in the Cashbook, it's when does it relate to. So if you have a scenario at the end of the year and you've had goods or services provided in March, but you're not going to be able to pay it till April because of the council process, you would make an adjustment for that. That would be a creditor adjustment because it relates to the current financial year, it relates to March. We'll talk more about that once we get to the AGAR section, about how you need to think about that, but that's understanding the differences. In terms of when you need to use these approaches, councils under 200,000, the threshold, can work in receipts and payments. Councils over that threshold need to work in income and expenditure, but that's only true once you've been over the threshold for 3 consecutive years. So you could be in a scenario where you've had a large grant come in, or you've made some large payments, if you're saying you're refurbishing your community hall, for example, and it's pushed you over that threshold. If within the next few years you go back down under the threshold, you don't need to move to income expenditure. It's just 3 consecutive years. Having said that, you can opt to use income expenditure if you want to and you're under the threshold. That often happens if you have made counsellor or clerk with a financial background, because income expenditure is more in line with sort of general commercial business accounting. If you are moving between approaches, beware of the requirement to restate the prior year as well. So if you find yourself this year in a scenario where you have to move because you've been over that threshold for 3 years, or you've decided to move, you need to ensure that both the years on your AGAR that we'll look at in a little bit, so you'll have last year and current year, they need to use the same approach. So beware of that requirement. If you do need to restate, that's again something that you could be doing now. So last year's figures updated to get yourselves ahead. Okay. Also thinking about the documentation that can assist you, the instructions, etc. So particularly if you are a new clerk or you're inexperienced, maybe this isn't your sort of happy place with looking at numbers and accounts, or if you are, maybe you've done the year end before, but you're in a different scenario. If you're at a different council that's larger, that's smaller, you found yourself working in a different approach because you've gone over that threshold, things are different. It might be what you need to do for the year end may also be different. So it's a good idea just to make yourself completely clear what you need to do. So that's understanding what the audit is going to require from you. So the level of audit. So for example, you may be able to exempt yourself if you're under the £25,000 threshold. There are some other criteria, so be clear on what that means and what does that mean for when you complete your year end. You're still going to need to do the AGAR, but you're not going to send it off. Okay, there's lots of information on the auditor's website, and obviously you'll start to receive some information from them as we get nearer the time. Also really important to have a copy of the DAPAG Practitioner's Guide. I'm hoping you've all got that already to work alongside with the AGAR. If any of you haven't, then I'm sure we could pop the link in the chat and then you can pick that up if you need it, because that really does help you break down each section relevant to the AGAR to help you complete it. Okay, as I said again there, thinking about restating the prior year, so it's important to think about other reasons for needing to restate. So we talked about moving between approaches, but beware as well if you've had your audit come back for last year and there's been some things that have been flagged up where you need to make a restatement, or you may have come in and realised that there was an error in last year. It might be something was done incorrectly, or often we see it where a new clerk has come in, they've looked back over the figures and found an error. If you need to restate, be clear on that, because you'll need to do that for last year as well. And again, that's something that you can just get ready now so that you know what your starting position is. So once you get into April for this year, we're looking at getting those figures collated correctly. Okay, so now we can think about the AGAR itself. Getting to that point, so once we've got point beyond the 31st of March, we can think about starting to collate that information. So just to be completely clear then, the AGAR is the Annual Governance and Accountability Return for the period 1st of April to 31st of March. That's the financial year that we're working with, and it's made up of 3 core sections: the Internal Audit Report, Section 1, the Annual Governance Statement, and Section 2, the Accounting Statements, which is the numbers bit. So that's the bit I want to concentrate mostly on today. I'll talk briefly about the other 2 firstly, but I think John's got some more information about a session that we've got coming up in the next month or so in the internal audit that will cover that in more detail. So to start with, we'll just look at that reasonably briefly. So the internal audit report is the summarised conclusion from internal audit. So the internal auditor will come in and review your procedures, your controls, etc., and have a look at those, and that is where you then summarise those findings within this section. Okay, so they're thinking about the way that you do certain things, the way that you manage items, that you calculate the precept correctly, you maintain your asset register, and the way and the scope of your internal audit may differ depending on both the size of your council, the things that you do. So if you're fairly, and it might be fairly static, standard kind of internal audit, but you may have a lot more processes going on that they need to come and review as well. Should be carried out at least annually. This is just a copy taken from the AGAR of the things that you need to then be able to answer yes or no to. Some of them may not be relevant to your council. So hopefully that you will be able to say that yes to these items, that these things are taking place. And then that will be based on what the internal auditor has reviewed in their report. That's fairly closely related to Section 1, the Annual Governance Statement, which is a review of the effectiveness of your system of internal controls. So this is again from the AGAR and the questions that they're a statement that you need to be able to say yes or no answers to. If you are answering yes to these, then you need to be able to support that and you have evidence that's true. You don't need to provide that evidence to the auditor. But if there was ever a question in looking into that, you need to be able to prove that those controls are in place, those things are happening. You may find yourself in a situation where, and the answers may be no, if some of the things aren't happening, if you don't have the appropriate procedures or controls in place, you may be in a situation where you're not able to say yes, and therefore you have to tick the no in there. In that scenario, you would have to provide some additional information to the auditor as to why and what the weaknesses are, what the issues surrounding that are, and also what's going to be done to counteract those that issue that you've identified. It's fairly closely related to the internal audit, because number 6 on here is that you've actually had the internal audit, so closely related. And these elements really are an overall review of what's happened in the year itself. So you need to just make sure that within the financial year, hopefully, that all these procedures and controls are in place. You can't do much to influence that at the end of the year, so it's just a sort of a review of what's happened overall. The real work starts once we get into the accounting statements, the numbers bit, because you're going to use the information that you've collated in your Cashbook in order to fill in the boxes in the accounting statements. As you can see, I've still got last year's dates on here because they haven't got the new ones out yet, but almost exactly the same, except obviously we're going to be ending in March 22. As you can see, we've got the current year there and what will be the prior year. So that's important to ensure that if you've got a restatement, that you're using the correct figures in there and you're showing both of them. And that's why it's important that you're using the same approach. So if you're moving between receipts and payments or income expenditure, they're in the same approach. Okay, so we'll think about each box in turn in a moment. But firstly, going back to receipts or payments or income expenditure, what that actually means when you come to do the accounting statements itself. So we've talked about what the difference is and when you might need to or not need to use it, but what does it actually mean when you're going to complete the accounting statements, the section 2. So receipts and payments, because it's fairly simple and it's a record of what happened when it happened, it makes life quite simple because you can take your figures directly from your Cashbook. Providing your Cashbook is complete, is accurate, and it reconciles to the bank, the figures that are total on the Cashbook can then go onto the accounting statements. Obviously, you're going to have to make sure you split them out to the appropriate boxes correctly, but the overall totals that you're working with will be the ones that you're working with when you fill it in. Okay, then you've got income and expenditure. So that would generally be that you would work on a receipts and payments basis throughout the year. So month on month, you'll be in receipts and payments, and then at the end of the year, you'll convert to income and expenditure. That's done in mainly 2 ways. Firstly is that you exclude the VAT. So when you complete the boxes on the annual return, they don't include that. So in your receipts and payments basis, your total payments figure will be the figure directly from the Cashbook, the total gross figure. In income expenditure, your total payments figure will not include the net element of those payments. Okay, that will constitute either a debtor or a creditor, depending on whether you owed VAT or you owe VAT to HMRC. You also need to add in your adjustments that we talked about at the start, thinking about your creditors and your debtors, the people you owe to make the timings correct, such as that something we've received in March that we're not going to pay for until April. Equally, you may have paid for something ahead. So if you've already made a payment in the current financial year, but it's work related to the new year, so if you paid for some building work to be done, but it's been delayed until May, then you take that out. It's a prepayment because it relates to the new financial year, and you don't want it showing in the current year because it's all about the timings of when those items are related to. Also, you may have debtors. So if you raise invoices to your customers and they've not paid you, then you would put a debtor adjustment in for that to reflect those ones that are owed to you. And equally, the flip side of that, if you've received any money in advance. So if, for example, you hire out your hall and somebody's paid you because they're having a function in June, but you've received the money, you take that out and move that out of this year into next year because they're receiving the benefit of that hiring of the hall in the new financial year in the summertime. Okay, so it's thinking about what do I need to move and change about my accounts to make it relevant to this current financial year itself. Having said all that, 2 things to consider with your adjustments. Firstly, to consider the materiality and the regularity. So the materiality in relation to the size of the adjustment that you're making. It's not really worth thinking about, the pounds and the pennies, that you might want to set a limit of what you're only going to adjust for everything over £100, for example. If you've got that set already and be consistent with what you're doing with that, you don't want to start adjusting for sort of pennies and pounds here unnecessarily. Also be mindful of regularity. So that's the regular items that you might be paying for on a monthly basis that may not need adjusting. For example, if you had a grounds maintenance contract coming in every month, but you pay them in arrears, so for March you pay April, You may think initially, oh, that constitutes a creditor because I'm not going to have paid him in the month that he worked for me. But if that happens every month, and this happened at the back end of last year that I paid March in April, then it just follows through. I'll still have 12 months of invoices within the financial year, so I don't need to make an adjustment at each end. The only difference there would be if they'd gone over and above the normal monthly value of their invoice and done some additional work in March, for example, that they've invoiced for, then you can put an additional adjustment in for that element of that additional work relating to that month itself. And it's really important to ensure last year's adjustments are reversed as well. So do make sure you do that, particularly if you have a manual or a spreadsheet system. If you use software, almost certainly those adjustments are automatically reversed. If not, you need to make sure you're reversing those from the last year itself. Okay then, so quick thinking about each box in turn, some things to be mindful of when you're filling them in. So box 1 is your balances brought forward. So I found fairly obvious, but it's important to make sure this equal to box 7 of the previous year, particularly if you've restated, so make sure you're using the correct opening balance. And also it's a good idea just to make sure that the figures that you think you submitted to the auditor are your final version. If you've had a few versions that were then submitted, it's important to make sure the one that you're working from for this year is what was actually submitted to the auditor for last year, so that your boxes match up and your 7th has become box 1. Box 2 is a precept or rates or levy. So for councils, just the precept. The rates or levies refers to draining boards, so don't think that you need to put your seal money and anything else in there. It's just your precept. Also be mindful if you received your precept from your local authority with something alongside it, such as council tax grant, make sure it's just the precept value that goes into box 2. Box 3, therefore, is your other receipts, fairly self-explanatory. It's all your other income other than the precept. Make sure, however, that you don't include bank transfers. If you've moved money from your one account to the other, it's not an in and out, it's not a receipt and a payment, it's a bank transfer that doesn't get included in that because it's just movements of money within the council. Exclude that if working in income expenditure, so that's kind of, as we've said, sort of true of all of them, so but I've noted it on there. And also be mindful as well that if you've had credit notes or a refund or an overpayment back from a supplier, it's not a receipt entry. Okay, so if you've overpaid a supplier and they send you some money back, it needs to be netted off against your total payments figure. It's a negative payment entry, not a receipt entry. We find that catches people out quite regularly because they've received some money from a supplier, so then it as a receipt entry. It's not a true receipt, it's a correction of an overpayment. So make sure you don't have your refunds and overpayments, etc., showing in box 3. Moving on then to box 4, which is your staff costs. So it changed last year towards the guidance that what can be included is just the core costs of your staff cost, salary, pension and I tax. Things such as mileage, home working isn't included in box 4. Hopefully it doesn't catch any of you out because that's true of last year as well, but just be aware of that when you're filling in box 4. Box 5, fairly self-explanatory, so that's your loan interest, capital repayments. If you've got a loan, you show that in box 5. And then therefore box 6 is all other payments, so your total payments figure less your staff cost and loan interest goes into box 6. Again, if you're working in income expenditure, you need to exclude that. And the things that I've said about other receipts are true on the flip side of other payments. Make sure you exclude any bank transfers, movements of money between bank accounts. And also, again, if you've got credit notes from suppliers, these need to be netted off against your payments. And just thinking about that as well, if you actually invoice customers, again, if you need to give a refund to a customer, it's a negative receipt, not a payment. So even if they've paid you and for whatever reason they cancel the invoice, if you paid them back, it's not a payment, it's a negative receipt because it comes off that initial receipt entry that you've had. It's making those things right. Okay, so just be aware of those slight differences and how to deal with those things. That then takes us to box 7. So this is the totals that you're working with. So obviously make sure that it all adds up. So it will be boxes 1, your opening balance plus your precept other receipts, less your payments out, which is your staff cost, loan repayments and other payments to get to box 7. Okay, and then that will then lead you into box 8, which is your total value of cash and short-term investment. So basically that's your bank rec position. So as I said you'll have need to do your bank rec in order that you can make sure that it matches up to this. So if you're working in receipts and payments, your box 7 and your box 8 will be the same figure. Box 8, your bank rec, will be equal to your box 7 figures, which is the summary of the cash, because we talked about, it's fairly self-explanatory, fairly simple process. If you're working in income expenditure, box 7 and box 8 will be different. Okay, so box 8 must be always your bank rec figure, but box 7 will be different because it's taking into account things that should or shouldn't have happened, those adjustments that we've put through for our creditors, for our debtors, for our VAT, etc. And that's something that you'll need to explain to the auditor what the difference is between box 7 and box 8. Okay. Box 9 then, your fixed assets and your long-term investments. So obviously make sure that you've updated for any new assets and any disposals you've made. So again, that could be something that you could look at doing now, particularly if you know you've had some additional assets in the year, that you could make sure your asset register is up to date. And make sure that you're using consistency in reporting of your total. So generally it will be the original purchase value, so your acquisition cost of those assets that appears in box 9. Some of you may have decided to use the current value because it's more relevant. Obviously, if you've got historic assets or gifted assets, they're showing that nominal pound in there is not really a true reflection of your actual asset value. So if you are using the current value or you've moved to that, make sure you're consistent with that. So in the same way that you need to restate if you move approaches, you'll also need to restate the previous year if you change the way that you value your assets in box 9. Also important to remember to ignore depreciation. So that also I've seen catch people out, because when they've come from sort of commercial accounting backgrounds and they're very used to depreciating their fixed assets, you don't do that in here. It's just purely the cost of that asset until you've disposed of it. Box 10, borrowings, fairly self-explanatory. That's your loan figure that you've got and the amount that you still owe as at the year-end point. Okay. So then we can think about the other documents that go alongside that. So you'll have the core AGAR that you fill in based on the number of the boxes that we looked at, but there will also be required some supporting information that goes alongside it. Firstly, bank reconciliation. So that's your bank rec as at the 31st of March, must agree to box 8, really important there. Okay. And just a quick aside, thinking about unpresented items. So if you still use checks, you may find yourself in a situation where you have unpresented items where you've sent off a check at the end of the financial year, but it hasn't gone through the bank statement at the point you get to the bank reconciliation. You need to deduct those unpresented items or add them in if they're unpresented checks, but you haven't paid them into your own bank account to your bank reconciliation. Most of the time now, because most councils hopefully have gone on to online banking, you have less issues with unpresented items. So a lot of the time your box 8 figure will be equal to the total of your bank statements, but be mindful of unpresented items needing to be deducted from box 8. Unpresented items are not the same as creditors and debtors. Creditors and debtors are things that you owe. Unpresented items are where you've paid it, but it as of yet hasn't appeared on the statement. Okay. As I said a minute ago, you'll also need to provide a reconciliation between 7 and 8 if you're an income and expenditure. So it will be a summary of your debtors and your creditors in order to show how box 7 and box 8 are different and what those constitute from that. And you'll also need to provide an explanation of variances if they're over 15% for boxes 2, 3, 4, 5, 6, and 9 and 10. So that's basically why is it different in comparison to this year to last year. So if you've had significant payments that you've made over and above normally, or you've had a grant come in that's pushed your receipts up, etc. So thinking about where those variances are. And also if box 7 is more than twice of box 2. So box 7 is your total funds, your closing balance. Box 2 is your preset. So that would basically mean that you're holding a lot of funds in comparison to your preset. And it means that therefore you most certainly have got some additional reserves. So you have some earmarked or capital reserves, and you need to give an explanation as to why that is. It's absolutely fine to hold reserves, and providing that you can give an explanation of that. You can't just have a slush fund of money in there. You need to have a clear record of those reserves, and you may hold a lot because if you're going large project, large refurbishment, building a sports hub, refurbishing the village hall, whatever it may be, you may have a very large reserve pot. So you may find yourself need to explain that as well. And you must make sure that you give full numerical explanations and breakdowns of the information that you're providing. It's not just acceptable to say, well, we had a better year last year, hide out the hall a bit more than because of COVID, it wasn't shut, and therefore receipts are higher. They need to see the numerical accompaniment to those explanations. Okay. So on to section 3 then. So thinking about what you're actually going to do once you've completed the AGAR. So once you've got a position where all those figures are in, you've gone through your tick box exercise. So once you've completed the accounting statements, the RFA will sign them, and then you'll have your meeting in order to receive and approve those items. So you can do that with the items as we've seen here, the internal audit report, the annual governance statement, the accounting statements. If you find yourself able to exempt yourself from audit, so under that £25,000 threshold and some other criteria that you meet, you can also approve that. And then you will, again, the sum statement and the accounting statements will be signed off. Okay. Then the RFA will need to set the commencement date for the exercise of public rights. So this means that the accounting records must be made available to view by any interested person, so anyone who wants to look at why they might do don't know, but they can do if they want to. Electors can also raise questions and make objections to those accounts as well. You must have approved and published the AGAR before this inspection period, so it's important to have that meeting. It's generally by the end of June that you need to have done that in order that you can set the inspection period that must be 30 working days as well. And then moving on, then what you then do with that. So if you're exempt from the audit, you can then send just that to the external auditor. So be clear that if you're exempt from external audit, you'll still complete the AGAR, but all you need to send off is the certificate of exemption. If you're not exempt, then you'll need to send all that paperwork, relevant paperwork off to external auditor. So the AGAR, those accompanying documents we talked about in terms of the variances, the bank rec, and also the detail of the exercise of public rights and any other information that you need to provide. So if you've needed to restate a reason why you've needed to do that, or if you've had any issues where you haven't been able to say yes to those annual governance statements and why that is. So any additional information that they require, you'd need to send that off as well. In terms of publishing it, then what you would need to do and when. So if you are exempt from audit, you can just publish everything that you've done because you dealt with the auditor in terms of sending off the certificate. So this is all the elements of that. So it's the AGAR parts of it, the bit that we talked about in terms of the variances, the bank rec, etc., and also the your certificate that says you can exempt yourself, and the details of the auditor as well. So all those bits of elements that you've collated in the process of doing your year end, you would then be able to publish, hopefully on your website. Slightly different if you're not exempt from audit, because you'd still do it, but with the AGAR itself, but initially you'd need to have that declaration that the accounts are as yet unaudited, and the details that you've provided. So that would be initially how you'd publish it. And then once you have that audit conclusion back, you can then update it because you'll have your external auditor's report and their certificate. So just a case of updating that on there. And this is generally, you do this by the end of September. So 30th of September, you want to have published all these documents to finish that process off. So then the last little bit today, then just to think about looking ahead to the new financial year. So I think at the moment, we're focused on the year end itself, and we're very much in this end of process to get that done. Obviously, back end of last year, we were thinking about the new year because we're going in the budget process. So we're sort of moving between thinking about the new year and the budget and everything looking ahead. Now we're back in sort of the depths of this current financial year and making sure that's done in order to complete the AGAR. And then once that's done, you'll find yourself obviously in the new year. I know quite a lot of clerks who like to finish the AGAR in this year end and then move on to the new financial year, which is okay if you can manage that timing, but some people it's just not possible for, that you need to have that crossover of working and sort of Tuesdays and thinking about the new financial year, but also thinking about the old one as well. So now is a good time, if you've got a bit of time if possible, to think about the new financial year. Get yourself ready to go if you need to. So you can set your Cashbook up for the new financial year so that you've got that ready. Okay, and now is a really good time as well to objectively review your accounts, records, or your Cashbook. So if you're finding that this process, particularly, so once you come to do some of the AGAR and finding the information that you need in order to complete it, is actually quite cumbersome, it's time consuming, it's hard to collate it. If you've got a spreadsheet, some of the formulas aren't quite right, you've got to do quite a lot of work behind the scenes. Is there some things that you can do to improve it? Is it fit for purpose? Do you need training on it? Often we speak to clerks who've taken over from another one and just been given a laptop and off they go, and they're getting on with it. It's very hard to work out what it needs to do, and does it suit the needs of your council? Thinking about what might need to change with regards to it. Is it that it was great 10 years ago when it was initially set up, but it's not really had any changes made to it, and now it's not particularly relevant? You may want to consider the change of medium or the way that the coding structure is working. So in terms of a couple of things to think about here then, in terms of structuring the Cashbook, base it on your council budget, your precept breakdown. Now, again, that sounds really quite obvious, but I've seen many Cashbooks where a clerk has a nice budget breakdown, nice sheets broken down into all these different elements, different codes with the budget set against them, and then they have a Cashbook that bears absolutely no resemblance to that budget sheet. So if they want to do some reporting on what have I actually spent against these budget lines, it's really not very easy to collate that information. So that should be your starting point, that you're basing on your budget, you're allocating your payment to receipt out of those budget codes so that you can easily then say, well, what have we received against these codes? Where am I with my budget? Also think about grouping codes together that require reporting on. So if you're, for example, got a village hall or an allotment or whatever it may be, that somebody, a committee, want to be able to report on something, can you easily group those items together to be able to report on it? Also think about whether you need additional codes or less codes, so based on the budget, but have you got too many? Are there just loads and loads of a great stream of information in that cash book, and a lot of the codes you simply don't use? Is it necessary to have all those in there, or are you finding that actually you've got a code, you've got a budget line for, say, open spaces, but actually it'd be really useful to know, what do we do at the rec ground, the play park, tree work, hedge cutting, etc., etc.? Can we break it down, make it more relevant in there? And also, can you put more information in the actual cash book to make it easy to refer to? If you don't record invoice numbers or VAT numbers, could you put that in there so that you're not having to keep looking up the paperwork? You've got all the information in that one core document that you can then use to refer to. Okay, I think that takes me through everything I wanted to go through today. I hope you found that useful. I will stop sharing and I'll hand back to John and see if there are any questions.
Awesome. Thank you very much, Hannah. So we've already been quite active on the questions on chat, and some of those have been answered. There are a few Scribe customers attending this event and asking Scribe specific questions. We won't be answering those in this event. We have our own dedicated training and support line for that. So yeah, we won't want to bore everybody with Scribe specific questions. So there are, I think, yeah, Anne Pallett, Chris Trigwell, Barbara, Sally Moore, you've all been asking questions. If you feel that they haven't been entirely answered on the chat, you can ask them right now if you want. Turn on your mic and video and you can ask us. So I'll give you Anne. I'll call out Anne first. Are you happy? You had a question around.
Yeah, about the asset register. I've got no idea what should be on my asset register and what amounts are allocated to things. I've seen examples of an asset register, but
okay, so have you got an amount that's in your box 9 from the previous year then that you've got for that?
I will have, yeah. I don't know at the minute what.
Okay, so
3
that
different ones and they're all different, very different.
Yeah, so that would be your starting point, as to say, well, what have you previously submitted that is your total of your assets? And then hopefully somewhere that you've got then a breakdown of what that's made up of. It may be that you need to review it to see if you've still got all those assets, or whether assets haven't been added onto it, or if you haven't got anything like that, it may be a case of needing to start again, and then you may need to restate, because if you can't collate what has actually been submitted as the amount against what you've actually got as a record, it may need a look through to see what actually makes that up. But hopefully somewhere behind the scenes.
Is there anywhere any written guidance on asset registers that I can look at?
I'll start having a look in the practitioner's guide, because there'll be a section in that sort of talks all about assets and how and what you'd include in that, and
okay,
that's be a good place to have a look at.
Thank you.
Okay, no problem.
And so Chris Trigwell, you have a question?
Yeah, thank you. Well, you already sort of answered it, but it still left me confused. Last year, the external auditor criticised, didn't make a big issue about it, but said that I shouldn't have included the income of a receipt that I'd received, rather, for insurance purposes against something, because it was a full amount. The expenditure and the receipt for that were the same, then it shouldn't have been included in.
Yes.
And you start to wonder, does that apply to grants as well? So if you get a grant from somebody for the whole thing, or even a part of a cost, do we discount that?
So in terms of insurance, yeah, you would net it off. So whatever you paid off and then you've had the insurance claim back of it, those things would net each other off. So then yes, they wouldn't be in there. And it's true of what we're still talking about in terms of refunds or anything. But grants, as I've seen it, you would record a grant, and then most of the time that grant might move into a pot of money that you then spend it from. So grants would still be receipts, and then you'd pay against them in the normal way.
So what's the difference?
Well, I suppose you're saying that was it one specific grant for one item that you've then purchased, is it?
Well, yeah, we would have had lots of grants towards things. I don't understand from an accountant point of view why we have to. I suppose
they're not a direct relationship. So you've got a receipt of where, if it's like with insurance, you've had a receipt in order to cover that cost of there. So that's a relationship. Whereas a grant, I suppose, I can see your point there. I suppose there's a relationship, but the grant is still money. You could otherwise you could argue off against anything that you receive that you then spend it on something. But those things then you record, and yes, you record a grant as income, and then you subsequently.
Well, I mean, I don't want to start a big argument, but
No,
grant,
I can see what you're saying.
grant,
That you could link. In theory, you could, most things you could have a relationship with and kind of try and almost sort of net those things.
No,
off.
not try. If you had a grant for a specific project that you were doing, you know, you had a project that cost 20,000 quid and somebody gave you £10,000, then presumably you'd net it off, would you, to that particular project?
No, you wouldn't. No, because
I don't really understand the difference.
Yeah, no, I can see what you're saying, but no, you wouldn't, because that, I suppose you can, but then that's true of anything, that if you had income of anything and you spent it on anything, you could say there was a relationship there, which sort of taking it too far. So although you have, the grant is a true receipt of money that you've had in and then you spend it, but that's true of anything that you might receive, whereas there's a direct relation, well, obviously in credit notes of correction, and an insurance is just a sort of reimbursement of a payment out that you've made.
Yeah, maybe. All right. Well, I just
yes,
don't
I can see what you're saying. Yeah,
I'm talking about direct.
Principle.
I'm talking about direct receipts and payments. Things that I can understand if we got 20,000 quid to anything you like, you know, you want to spend it on, you know, still or something like that. That's entirely different. But when you get a specific amount of money come in, it doesn't seem to me that it's any different from receiving the insurance. But never mind. I don't want to hog this.
No, you're fine. I can. Yeah, okay. Thank you.
Thank you, Chris. We got Helen Broughton. Are you there?
I'm here. Here I am. Hang on. Do receipts and we're receipts and payments. So we claim back the VAT, which comes in after year end. Do you put that in income when it comes in, or?
Yes, you do. Yeah, okay. You don't need to do anything about the real VAT when you receipts and payments. You just let it happen. So if you've paid it out as part of a payment, it's in your payment total. If you've received it within the year, it's in your receipts total.
Okay. One more thing, is it possible to restate, because I've started working for a council that's on income and expenditure, but their income's less than 200,000? It'd be simple as receipts.
Yes, absolutely. So you could decide to go back down to receipts and payments. That's absolutely fine. All you'd need to do is restate the previous year. If the prior year is in income and expenditure, you'd need to restate it. So basically put it back into receipts and payments so both years are the same.
Okay, thank you.
Okay.
Thank you, Helen. Lisa, you've been patient. Yes.
Go first.
Now's your chance.
Right. I don't know if Helen wants to go first. Oh, or was that hello? Sorry. Right. I've got 3 questions actually. You say in box the one with reserves in.
Your total funds, box 7.
Yeah, yes, at box 1, saying balance brought forward, and reserves must match. But surely you've obviously reserved amount for a project. The project has carried on, so you would have spent those reserves. So how can it be the same in box 1?
So box 7 becomes box 1. So box 7 is your last year's closing balance, which is your total position. And then that becomes box 1 of the new financial year. So it would be, so if you
I see, just open balance.
Yeah, you're just starting again. So if you had anything left in your reserve, they just start at the start of the year to spend it,
Okay, that's fine. And then exemption under 25k, very, very basic fundamental one, this. Do you have to be over 25k on expenses and income, or is it one or the other?
It's both. So if you go over either, then you can't exempt yourself.
So if I'm over on income but not on expenses, I would still have to go.
You can't exempt yourself. Yeah.
Okay. And then the third one is just what the gentleman was talking about earlier, Chris Trigwell. Are you saying that insurance claims aren't considered part of income?
Yes, because they want you to net them off against what you've, so if you then, I don't know, the wall fell down and you fixed it, but you claimed it back, the payment that you made, you would then net it off against that, because it's kind of covering that cost that you spent to do that.
Sorry, it's when you use the phrase net it off.
Okay, so you
made a against the lawnmower.
Yes, if you had to buy a lawnmower,
were paid back by the insurance company. Obviously there's a difference because the insurance company don't pay 100%. So
yeah,
where
you
do
deduct,
I
yes,
show
you deduct it. So you had, if you had to buy a new lawnmower and it cost you £1,000, but you got £500 back, you do
Yes.
a £1,000 payment less £500 insurance claim on it. So the payment cost in that element would be £500 in box 6.
Right, I see. Okay. So you would only actually record the remaining expense of the replacement lawnmower, not the full expense.
Yes, the overall effect of what you would be saying is this is how much it actually cost me to do that. In the same way, think about credit notes. If you paid £100 but they gave you £50 back, you'd have £50 would make up that.
Right.
Yeah, if you may want to record it as separate elements just so you can see what's happened in the cash book, but the sort of resulting total would be, yeah, the final figure that we said.
Yeah,
Right.
Hannah, we've got a couple of others that are asking the same thing as well in other ways. And there does still seem to be some confusion over where those negative payments are actually coming in. So if you're able to sort of explain a little bit further that obviously as such as the insurance payments and things like that, it's obviously going to be, you don't want it to artificially increase your income because whereas the other ones, they're sort of saying, oh, well, if the council have already paid something or if somebody's paying me back for something else, it's still income being received, which is why it's going into a separate box. But could you explain that in just a little bit more detail?
So I
We've
suppose
had
it's clear about
another 2 questions on that.
Yes, it's clear about being the differences that if you,
it is.
So thinking about sort of fundamentally, if it's a correction of something. So if you've overpaid somebody by £1,000, they send it back. That is not a payment in a receipt entry because you're just correcting what's happened. If you are charging a separate invoice out for something, if you're saying that's a service, you would see that as a separate thing, because if you're saying I've bought this but then I've charged for it, that would be, you could then see that as an additional element because if you're invoicing for it. But it's thinking about that relationship of whether I've paid for something but then I've actually had it. So there is a crossover, and I can see, I'm sorry I've forgotten that gentleman's name, what he meant by that. There is that kind of grey area around, is it an income, is it a receipt and a payment, or is it just a correction of what has actually happened? And the main thing is not to overstate your receipts and your payments. That thinking about that if it does, then it needs to net it off there. But there may be, I don't know whether there's any examples in the practitioner's guide that would give some specific examples, because I've only seen it in insurance, and obviously it's very clear cut with the credit note, but whether there's other things that would be examined in there.
So for me, it's just recorded in the cash book side. It's not the actual claim received from the insurance company is not actually recorded in income. It's just shown in the transactions of expenses and
yes, yeah. So you'd have a line.
So there it would knit itself off naturally then.
Yes, exactly. Yes. Right. So you have a line, fine. Purchase of the lawnmower 1,000, insurance reimbursement minus 500, and that would naturally just then total it up.
Right. Okay. Rather than put it as a separate entry.
Correct. That's what you want to avoid against. Fine. Otherwise, you end up with it rather than it. Yeah. Yes. The payment and the won't have a relationship, whereas a payment and a negative payment will work itself out.
Thank
you.
No, that's unfortunately all we have for questions answers. If you have any other questions, feel free to drop it into the chat right now, and then we can follow up with you with the answers there. So it's really good to to get the overview from Hannah and to have this Q&A afterwards, but it's also good really to see it in action. So Tracy's prepared a demonstration specifically about what we've been talking today, so you actually can see it in action. It's using Scribe software, but it gives an opportunity just to kind of actually visually see some of these things happening. So over to you, Tracy.
Thanks very much, John. So let me start by sharing my screen then, and hopefully you will all be able to see the website that I've got here behind us. So as we mentioned, Scribe is web-based, so you can access it from any tablet, PC or laptop. We do have unlimited support as part of our commitment to our customers, and we've got this support menu at the top from our website. As you can see, that is www.scribeaccounts.com. And here is those links that we were looking at earlier for the that NALC practitioner's guide. and other relevant parts that we've got in there. We also have our Scribe Academy. As I said, we have unlimited support as a commitment to our customers, and here is a list of all of the free training sessions that we have enabled for everybody. Once we log into Scribe, it's secured with your username and a password. We've got menu options that we've got down the side here, and the first thing I'd just like to show you briefly is an account menu and your council profile. So Scribe allows you to customize the system. You can have your own logo, and this does filter through into your invoices and your purchase orders. And then with the calculation of your precept and your total other receipts, that will identify which accounting type you're going to be in here. So this gets set automatically. So we've got, as Hannah was mentioning, either income and expenditure or receipts and payments. And once you choose it here, then Scribe will actually set those year-end menus for you. So I've obviously got mine set to income and expenditure, but you'll notice here then I've already got those balance sheets, that good old reconciliation between boxes and 7, and the working documents that you need in addition for receipts as per income and expenditure. Similarly, you can pop a tick in this box here if you're VAT registered. By popping the tick in that box, then that will also set Scribe to give you those links through for Making Tax Digital if you are registered. And obviously that VAT 100 for those of you that are registered as well. If you don't have that tick in the box, then it will just defer back to your normal form 126 that will appear. We've got a setup menu. Scribe works on a 2-tier system. We've got cost centers being that highest level of division. And then beneath that, you've obviously got your cost codes, and that's obviously going to be those analysis elements, and those that obviously, as Hannah said there, that we suggest your budgets are set to. Cost codes are obviously attached to your chosen cost center. And as you can see here, some of mine have got reserves that have been attached to them as well. You can also use Scribe to monitor your reserves, and you can have an existing balance that's been brought forward to the previous budget. So if I take one here that I've already got, let's have a look at my rent, for example. So I've attached that to my cost centre of Town Hall with a reserve that can be attached if necessary, and that balance brought forward. But one of the great things that we've got here is the type. So type is really useful because this is what actually tells Scribe how to populate that year-end report, that AGAR, automatically for you. So by setting it to a type of default, that's obviously telling you that it's either your general receipts or your general payments, and that's going to go into those relevant boxes 3 and 6. Similarly, obviously, if you're setting up your precept, you'd attach it here, and that's going to filter that through automatically for you into your box 2. We've obviously got staff there as well for the box 4, and capital repayments being box 5. So there's a facility to add forecasting as well for your budgeting purposes. And then, of course, at the bottom, we've got those all-important budgets. They can be fixed to be spread monthly or quarterly. We know a lot of councils operate on quarterly reports, but you can also flex them manually. And by doing them manually, you can then put in individual payment budgets for each individual month. Might be specific for something like grass cuttings, where you've got higher expenditure going on in sort of like the summer months and not so much in the winter months, and also quite useful for things like subscriptions, where you may only have 1 or 2 payments going out throughout the year. So then we've got your cash book itself. So you've got your transactions that can be added in as either your payments and your receipts. And these can be added in individually. Once it's set up within the account, you link it obviously to your bank account. There's a full date facility here, and your descriptions of your expenses that you've got. They're all marked into their individual cost centers and cost codes. There's also a tick here for S137 payments, and we've got throughout a reports menu the ability to report on anything that's specifically marked as S137. You can also pop a little tick in a box to say that it's awaiting authorization. You then don't have to produce a separate report for payments or waiting authorization. It's already in your cash book, and you can obviously download any of those reports and print them off, take them to meetings. And if they've already been approved, then there's no extra work for you to be done. They're already in your cash book waiting for that minute reference to go through and be approved for payment. Your VAT types are already set within Scribe as well, so it's literally just a case of choosing whether it's standard or outside scope, or the lower rates as well. You've also got one for the HMRC for calculating that VAT for you. By selecting that something is standard, Scribe will then automatically apply that 20% VAT for you and calculate the total. Once you've added all of the transactions into your cash book, you can then reconcile this through your bank. So we do this through our bank menu. I come down to my bank menu and to reconcile here, and I've got a list here of all of my transactions. So it's simply just a case of putting in that cash date. So obviously taking that bank statement, which is an audit in itself, really. It's very unlikely that you're going to be making the same mistakes as your bank statement will be. So you pop in that cash date, so that statement date that you've got of your statement, and then it's just a case of literally, or I haven't put a date in yet, sorry about that, popping in a date, and then obviously just ticking those ones off that are relevant, that are on the statement that you've got through from there. So I'm choosing ones that are obviously already going into the next year, which is why it's telling me that it can't accept that one to go through. So once they've all been reconciled, Scribe will actually give you, will make the calculations based on what you've selected, and it will tell you what your bank statement should be. You can then go through with a reconcile all banks. So this is going to be that full audit that obviously you can use yourself, and the auditors will use as well, to actually say, okay, we've got your bank statements here for, in my example, I've got November, and then you're going to type in the physical amount that's on your bank statement. By clicking on to save and next, Scribe will do its magic and will calculate everything through. So you've got your full audit trail that you've got here then. So I've got my bank reconciliation. This is put into two different parts. So the top part's actually going to use the annual return figure. So it's that cash in hand that you had, that box 7 figure that Hannah was talking about on the year end for your AGAR. And then it's going to add all of the transactions that you've got in your cash book. So all of those receipts that you've added in are going to be added to your initial opening cash in hand, and it's going to subtract the payments that you've got to give you that revised cash in hand total there. And then the audit, the bottom part of it, is your physical bank statements. So here we've got what you've said is physically in your bank. Because it's based on the date for November, any transactions that I've got in the moment for December or January are excluded. So it's going to less those unpresented receipts and payments and give me that adjusted bank balance. So I've got that full reconciliation that's been done now. And obviously if part A matches part B, then we know our cash book matches with our bank account and everything is okay. There's a whole host of reports that you can run if you do have any reconciliation errors as well. And where we've got these unpresented items, unpresented receipts here, we can change from our summary just at the press of a button to actually view what those uncashed payments are that have not gone through the bank yet. Similarly for year end then, all we do when we get to year end, depending on whether you're in receipts and payments or income and expenditure, for income and expenditure, we just run this little calculate button, and all we do is press a button. We'll get some lovely green boxes come up at the top to tell us that our reserves and balance sheet have automatically been calculated for us, as well as our working document. And yes, it's as easy as that. Once it's done, we click on to annual return. And here is a copy of our AGAR ready for us. So all of the figures from last year and this year are already there. It's already in the correct format required for it to be sent off. We've also got those good old balance sheets, the working documents, and the reconciliation between box and 7. And it is literally just a case of obviously popping in those, popping in to view that report, and it's there already for you. As we mentioned, Scribe manages your VAT for you as well. So by selecting that VAT rate and typing in your VAT registered suppliers, then we can actually have a look and run our VAT summary. So it's going to take that opening position that you've got from the beginning of the year, and obviously make sure that it's adjusted it for all of your receipts and your payments that you've got. And it's going to tell you what's left for running that through. You can run a copy of your VAT list. You can do this by quarters, so it's automatically set for the different quarters for you. Obviously, if you're running in receipts and payments, you can do it for the whole financial year, or you can customize your own date range. For ease, I'm just going to run quarter 4 for the moment. And once I view this report, I've obviously got a list of all of my payments that have come through from my cash book. You can see here, if I make it just a little bit bigger, that we've obviously got the dates that apply to those transactions, the supplier's registered VAT number, and obviously details of those transactions. It pops everything together and will obviously tell you, based on the date period that you've got with your receipts and your payments, the amount of VAT that you can claim back for this period. And then it's literally just a case of obviously running that VAT 100 off as well. So looking to the year ahead, you can set Scribe up to create that next financial year at any time that you want to. It's very easy to do, and you can copy forward your structure, easily amending anything when necessary. There's lots of reports available. If I go to the budgeting report, for one, I do have my new financial year already set up within Scribe. So by running and taking a look at this report, I can see that I've got a 3-year forecast here. So I've got last year, I've got that 2020, 2021. I've got the current year with the budget against actuals for this year, 2021, 2022. And you can see in looking to the year ahead now, I've now got my 2022, 2023, and I've already included my budgets there. So all of the reports within Scribe can be emailed directly from within the system. So you can send that through and you can email it if it's linked up to my Gmail account, that will open that automatically. Or you can just copy the link to the pasteboard and send it directly through your own email client. You can download the reports as well. You can download them as a PDF or drill them down further into Excel if you wish to. And you can obviously print them here as well. There's also an advanced tab that we've got here. The advanced tab allows easy filtering of data, and some of the reports have more filters than others. We've also got links right at the top for our other packages for cemetery and for bookings. If you are interested in any further details of these or for a free demo of the software, pop yes into the chat now and we'll pop you in for that. So that takes me to the end of the presentation. I hope you found at least some of that useful. I will now stop sharing my screen and open it up to any further questions that there may be.
Okay, thank you.
Well, sorry, can I just ask a question? I mentioned in the chat about home payment, working at home payment. What I don't understand is I thought it was a tax adjustment, not an actual expense. Is that right?
So in terms of where it should appear in which box do you mean?
Yeah, you mentioned when you were doing the boxes, you said that it shouldn't go in staff costs. Well, my understanding was it was a tax adjustment. It's not something that the council actually.
Oh, okay, yeah. So yeah, sorry. That element of it is if it relates to that, but if you have a specific amount that you get paid.
Oh, like an agreed amount.
Yeah.
Right.
Yeah. Sorry. Yes. Yeah. The practitioner's guide will tell you. But yeah, other things. Yeah, that's okay.
That's clear. Thank you.
Thank you.
Okay, I think we're up to maximum time and 2 minutes over schedule. If you want to know more about Scribe and you want a dedicated session to learn about how we can help you out, feel free to type yes in the chat right now and we'll get back to you. Otherwise, have a really good day and enjoy the rest of your week.
Thanks everyone. Bye.
Thanks everyone, thank you.